Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. This is the weekend edition where we interview notable people from the world of real estate investing. Today is no exception. We have a great guest. He's a specialist in retirement savings and in retirement investing. All the way from Sedona, Arizona. Welcome to the show, Damion Lupo.
Victor, it's good to be back.
Damion, we've got to know each other over the last several years, and you specialize in a particular form of retirement savings called the EQRP. We'll spend a couple of minutes on that, but in particular today, what I'd love to talk about are some of the new features of the Kerrs Act that has just been implemented in the United States and what this might open up for investors. There's some great things happening. We'd love to talk with you about that.
Yeah, so a refresher for those that haven't heard of it, or they just have heard of it, but they want a little up to date. The EQRP is the Enhanced Qualified Retirement Plan. It's a type of retirement account that allows you to have total control of your retirement money. Basically, you have a checkbook and you can invest in things like real estate or precious metals, gold, silver. It allows you to take old IRA money, old 401k money, and put it into an account. And really, anybody that wants to do it is eligible to do it. It just requires some type of business. Like, you could have an eBay store and something simple, or you could be a property manager. Bottom line is it gives you control. You get your money out of Wall Street. And because of the Kerrs Act that we're going to go into, it allows people to pull some money that they probably couldn't have touched until about 3-4 weeks ago. So we're pretty excited about what's going on. It's untrapping a lot of people's money that's been stuck behind the curtain on Wall Street.
I love that. So let's just talk a little bit more about the EQRP. So the EQRP basically is a form of a self-directed retirement plan where you have control of it. But what is it that distinguishes that from, let's say, a self-directed IRA?
Big differences, a couple of big differences. One, you can put very little money in an IRA, maybe $5,000 or $6,000 a year. With an EQRP, you can put 10 times that amount into it. So we're talking $50,000 to $60,000 per person per year. All the money could be deferred or Roth in the EQRP. Sometimes there's limits with an IRA. If you make too much money, you can't have a Roth. And Roth is really what we should be looking at for making your money tax-free forever. Big difference. There's no custodian with an EQRP, so you get to be in charge. And the biggest difference is that if you're ever doing any type of investment in real estate, that may be a syndication or anything with debt, and that's one of the reasons we love real estate, because we can use debt. With an IRA, you're going to be subject to tax, the UBIT tax, which can be up to 37% of your profits from the debt. So like if you have 70% debt in a property or a project, then 70% of your profits, if you used an IRA, would be subject to this tax. I mean, quick math, if you had $50,000 into a deal and it had 70% debt, you could potentially be paying up to $12,000 in tax with an IRA. And instead, if you used an EQRP, your tax would be zero. So it's a massive difference. And there's really, when you think about doing one versus the other, there's no reason that you'd ever want to do an IRA if you knew about the EQRP. It's a no-brainer.
Why is it that more people aren't doing it? Is it simply lack of education? Is it just because it's not the preferred vehicle for Wall Street to use? What's the obstacle?
The biggest thing is fees. The custodians in IRAs make a ton of fees. The IRA industry is actually the biggest industry of all the pieces. It's a $10 trillion assets under management industry. And the average IRA is trying to figure out how to get $2,000 to $4,000 per year from their client. And it's really just about the sticky factor. It's about people getting money under management and then keeping it there. And I think that's awesome as long as there's value created. Unfortunately, the system wants to keep the money and maybe not do very much value like a lot of us do with syndications and investing. We actually create value. And so there's a great exchange. Most people don't know about it because the big marketing dollars come from IRA custodians. And that's what people are told by maybe a 401k administrator when they leave a job. They say, oh, you can push this into an IRA. They never really tell them about the alternative because everybody is so brainwashed into believing that it's all Wall Street. And so they say, oh, you can control it. You can do a different mutual fund with an IRA. And that's really where we've left it. And unless people are spending time with places like the Real Estate Guys or Secrets of Successful Syndication or some other event, they're really never going to hear about these things. It's not mainstream. And unfortunately, most people are kind of stuck in mainstream thinking.
Yeah, I get that. So let's talk a little bit about the Kerrs Act. This is what was enacted by Congress at the end of March, specifically to deal with the coronavirus pandemic. And there were a number of different provisions in the Kerrs Act. Let's focus on the ones that in particular would benefit folks that have a retirement account with you.
Yeah, so the Kerrs Act on March 27th that was signed into law was a big old package of giveaways and gimmies to over $2 trillion The big part that impacts people with retirement accounts had three pieces. The easiest one is that if you have a required minimum distribution, like you're 72 years old, that's not, you don't have to take those in 2020. Interesting, but not super significant. What's really significant is they allow people to do two things now. You can disperse money out of a 401k, EQRP, or IRA up to $100,000 with no penalty. And if you're less than 59 and a half, typically it would be a 10% penalty. And oftentimes you weren't even allowed to take money out, or if you were, it was very little. So right now, if you want $100,000, you can take it out as a disbursement, and you have two options. One, you can return it to a retirement plan within 3 years, no payments, no penalties, no taxes, nothing. It's kind of just like a really long loan. It's actually considered a rollover. So that's one way where you can just kind of use it for whatever you want. The other way is if you want to keep it, you can actually take it and then you can split the amount that you took out into thirds and then pay income tax on a third of what you've taken out over the next 3 years. So you can either treat it as a true disbursement or you can just roll it over. So like, here's the cool part. If you have a 401k or maybe a thrift savings plan, which is like a government retirement account, you could go to them and you could say, I want to do a disbursement. You can pull it out where you weren't allowed to before, and then you can move that into an EQRP and start investing in real estate. This may be the only opportunity you'll have in your lifetime before you retire to actually get access to some of that money. And so up to $100,000 per person is eligible for the disbursement. So that was the first chunk. The other one is kind of interesting because it allows you to borrow $100,000 up to all of your money, whichever is less. And so you could borrow it and then pay it back over 6 years. No payments in 2020. And so this is only eligible for 401ks and EQRPs, not IRAs. So if somebody has an EQRP, potentially they could take up to $200,000 out right now, not pay a dime in payments or penalties or taxes or anything this year, and have that $200,000 for real estate investments or maybe making your house payment or whatever you want. This money was not available until 4 weeks ago. Very, very powerful. And it only lasts until September for the loans and through the end of December for the disbursement. So huge opportunity for people to get some of their money out from under the Wall Street system and pull it out, even if you're still working at a company right now.
I love that. Now, you mentioned a couple of different asset classes that one could potentially invest in. You mentioned precious metals. Now, does that mean you can invest in the actual physical metal, or is it only restricted to, say, gold certificates? What are some of the restrictions there?
So one of the great things about an EQRP is you have the ability to buy physical gold and silver and take possession of it. And this is something that you can't do with an IRA. Typically, almost never, in fact, I've never seen it, could you do this with a 401k at a company. It's only with something that's self-directed like an EQRP, and again, not an IRA. And for anybody, and you and I know this, you would never really want to buy a gold or silver certificate. The reason you'd buy it is because a financial advisor wants to sell it to you and keep it in their asset base for fees. But that's not really representative of real gold and silver. The only thing that's representative is holding the stuff in your hand. And that's our friend Dana Samuelson talks about this a lot when he's sharing about gold and silver, and Brian London. I mean, there's a reason that physical gold and silver is so valuable because there's no counterparty risk. And with an EQRP, you can use some of your retirement account and buy physical metals and keep it yourself. So incredible opportunity to control assets and have real assets at the same time.
Well, as you may know, we had Dana as a guest on the show this past week, and he just gave an incredibly detailed explanation of how the market works and how to access physical metal in today's environment. It's not like it was in the past. It's a very unusual time, and it's an incredible opportunity right now, in particular for silver, which is trading at a huge discount compared to gold right now. So I know that for myself, this is an area that I've been making investments, and literally every week I'm making purchases as material becomes available.
I think that's an important thing for everybody. There's nobody that I can think of that should not have physical gold and silver in your portfolio. Even if it was to start with 1 ounce of silver, it's important to understand what real money is and to start using that as a hedge against this insane printing that's going on. So no matter what it is, doesn't matter if it's an American eagle, a gold, a silver maple leaf, or some type of round or bar, having something that's real. And again, it's really great because if you don't necessarily have extra cash, but you have your retirement account, you could start using those assets to convert to real metals, which I think is a very smart play for any savvy investor.
Absolutely. So what are some of the other things that are possible? You mentioned having a corporation or a limited liability company. What are some of the things that open up in the Kerrs Act that's also available to you within an EQRP?
Well, really anything you can imagine, whether it's a private company, whether it's a coffee or cacao field in Panama or Belize, you can do private equity in small companies, startups. You can be the bank, you can loan money out and have mailbox money. I mean, it's kind of nice to get paid interest versus always paying it. So you can do those type of things. And I mean, when you think about borrowing money or the disbursements, one of the great things is you can do absolutely anything. You could invest in yourself with mentoring programs or education. And that's not something that, let's say that a program costs $10,000 or $20,000 for you to do. You may not have that laying around, but perhaps it's in your retirement account, and you can start investing in yourself, because you and I both know this, that the best investment anyone will ever make is in themselves. It has nothing to do with an asset other than your brain and how you think in your context about how you operate.
Interesting. What types of things are not permitted in an EQRP?
The things that you can't put in there are collectibles, wine, because the government doesn't want you to not have any retirement left, like you drank it all. So they don't let you do that. Collectible cars aren't eligible. Something that you might use, like a vacation house. You couldn't go and buy a vacation house, live in it, although you could buy one and rent it out and then move into it when you hit 59 and a half. So there's very few things that you can't do. It's pretty wide open, and people have been misled to think that the options are 5 different mutual funds and that's it. But truly, you can do almost anything with almost anybody.
I love it. I love it. Well, Damion, if folks want to connect, if they want to learn more, what's the best way?
Best way to learn more about the EQRP is to text the word EQRP to 72,000, and you'll get a summation of what we've been talking about, a report, and if you'd like, a copy of the QRP book. So simple as grabbing the phone. You're probably listening to this right now on it, and just send the word EQRP to 72,000, and we'll get the information right out to you.
I love it. Well, thank you, Damion. That's a very fascinating topic. I mean, there's just so many options that are available that most people don't know about, and I wish it was more mainstream than it is. Oftentimes when people look at something and they say it seems too good to be true, this time it's not.
That's right. This is something that's right in front of you. It's hidden in plain sight, as we say. And if you want to know more about it, easy way to go get it, just text EQRP 72,000, and we'll get the ball rolling with your education.
Thanks, Damion. Thanks for the insight. And for the listeners at home, definitely reach out to Damion. Text EQRP to 72,000. In the meantime, have an awesome rest of your weekend. Go make some great things happen. We'll talk to you again tomorrow.